Hey guys, how are you? Yep, it's the Market Sniper. We're coming up to you. That's right. So since this is FX, by the way, and many of you get turned off about this. This is about Europe. This is about Europe going down. This is about Europe going down. And it's the euro going down, but it's not exclusively the euro going down. You're going to find it's the Polish zloty, it's the Danish krona as well. We can even take a skip past the Swedish krona if we like. But it is the euro down. And by the way, we have spoken about this trade. It was one of our macro FX trades that we gave you in a 6-header macro header. That was Euro Swiss franc and Euro USD to the downside, strongly on the European currency, the EUR. These are some of the YouTubes that we have made over the course of this period. 4 months ago, is the Euro Swiss franc highlighting EU and global debt stress. Euro failure, Euro Swiss franc, Euro USD. Euro Christmas Swiss roll, super rewarding FX trading into the new year of 2022. Again, Euro Swiss franc, Euro USD. Euro fall continues. That was an update 3 months ago. That was 4 months ago. We started this 5, 6 and beyond months ago in 2021, talking about how we saw the big sell-offs, the predictions that we were making, which was dollar dominance as a currency in an environment that was generally inflationary, that is seeing FX emerging fails, that saw the USD try be the leader amongst that. We've just seen another HVF, the ruble, smash it to target. If you're a recipient of our newsletter, you'll see the pre-call. Coming back to the Euro USD, this was where the chart was at that point in time, highlighting to you that the 117 for us was very much a restriction. That's the point of the video that we're showing you, the Euro USD element. That is the 117. This was your complex head. We talk about this in great detail, how complex head and shoulders form and how they should be traded. And that is the HVF method approach to trading charts. And that this was going to bring you down sub the 110 in the Euro USD pair crosses. Also in the video, of course, was the great Euro Swiss franc. Let's have a little look and see when that fella shows up. A little bit on the dollar index as well, which is a kind of inverted version, There it was, expecting us to come on up to in and around the 97s, 98s, 99s. At that point, it was still early doors before having a small dip and then potentially moving on even further. So in essence, the Great Reset actually sees dollar strength, and that's hard on the euro broadly. What else? Where's our Euro Swiss franc trade? Let's see if we can find that being referenced here. There it is. This is the Swiss franc trade that we were saying that is coming. Overall, we were highlighting this particular structure for downside and expecting it to make a spill to the downside, and actually for us to see target-wise 0.7s. So how have we gone? Also, let's check in with the comments section. I always like the comment section. By the way, trading is not about being right or wrong. Of course, we're revisiting it because it's made progress in that sense, but it's about what you make when you're right and what you lose when you're wrong. And if you have a really tightly managed risk where you have 1 unit of risk, you can be wrong 9 times and right once out of 10, and everyone can think you're a complete numpty. But if your risk reward is 9.5, you're actually making money. Even though you're losing 9, you're making 9.5 on that 10th one. You're winning. And the value of what we do is high reward, expansive trades with tight risk management and loss. And to find out more, go to themarketsniper.com. Have a look at the website, thatmarketsniper.com, and you can book a chat. So Ryan S., this is going to be wrong. Okay, Ryan. Jesse Livermore, short the euro. Why? Short the pound. That country's going down. A bad trader is a believer in his own bullshit. Okay, that's good. Francis, are you in Manila? No, but it hopefully is going to be a thriller or a spiller. He's been calling for euro parity for around 6 years now. No, not true. There has been one particular setup that invalidated, and now it has cycled round and has come back. How do I put sterlings into Swiss francs? You open in a bank account that offers it. Short the pound and buy commodities. I agree with short fiat generally. Short the euro and buy commodities would have been my preference, and of course the ruble, and before that the Turkish lira. If you were doing those things, you could have done okay. So interesting bit of comments. Some people like, some people dislike. So let's go have a look at how we've been doing. So this is the Euro USD. There's that head and shoulders that you were looking at. This is a 2-day instead of the possible day. So I've compressed it because there's been more action. That's how your euros performed. That video was coming out round about during here. This period, 118s, you're now at 109s. 109s, and it ain't over. In my overall opinion, it ain't over, but you have just run a head and shoulder target. So the possibility in this final spill that they will not like it as disorderly makes this a very bad time if you're watching this trade right now to get in, because you could face a snapback rally given that the targets are just run. But overall, this head and shoulder has performed. Incidentally, it's worth looking at this in combination with the dollar index, which is close to being the upside down version of this. Here's a target being run on a type 3 pop-out wedge. That target was being, we discussed that possibility. When you have wedges, most people expect a rising wedge to break down. When you have wedges that are inside of structures that are bullish, note the inverted head and shoulder in the red. We have a 2 neckline draw option. You have already made the first target on the 98 level. There is a 99 version thereof. That's the red version that you see there, left shoulder, right shoulder. And that is still outstanding. You could get a possible blow off to the 99. But then you come into the sticky resistance of a first inverted that was post the events of March 2020 over here, and I expect this will be tough. You'll probably just put a foot above that red line if and when you do it. You could also rest, and that could take a while. So this has been, whenever you get a little bit of a blow off and a little bit too strong a move in currencies, your chief manipulators and master puppeteers don't like the disorderliness. It puts them under pressure to make decisions that they don't want to have to make. So you often can get pulled back. So again, it's not a time to enter the trade. The time to enter the trade was on the breakout here or the return move down here at 93. Now you're at 98. That's a whole different ballgame. And you will have made great money on the Euro USD to the downside. And also the trade was all about Switzerland as well, the Euro Swiss franc. So let's have a little look at that. How far have you done? We suggested getting short on that grind line. So the value of this is we are early in the markets. Other people are starting to talk about this now. Started to see a lot of people paying attention to this now. Oh, by the way, of course you get the Swiss National Bank SNB. Swiss franc close to parity, a concern, Swiss eco minister. You see, you start to get the news when you get to the key round numbers. Let's get that column over there in the frame. It's a concern, he says. Yes, of course it is, whenever it's getting psychologically close. Whenever it's getting psychologically close. And also you'll see other voices now suddenly coming as it starts to make the news. Now this is going to be, my friends, a large event that is going to do some real damage. We'll leave the social media. You've banked 22.61 of a possible 100 plus risk reward trade, by the way, if you'd been in from the beginning here at the break over there. Now, just to put that in clarification, all those people telling me how wrong I am in the comments, I can afford to be wrong 99 times if I land 100:1 trade. Do they conceptually understand that? I can be the most wrongest person. It truly is about what you do with your money management, how long you stay in the trade, what rewards you get. If you've executed perfectly, which I rarely do, in actual fact you will have in excess of 113.22 R's. That actually means you can be wrong 112 times. I have to tell you, that would be deeply unlikely to be that wrong. You need to take a break if you are that many times in a row incorrect. So it is very beneficial to catch. And this is reset season, guys. These are reset financial trades. It looks to me like this parity is potentially going to happen. It is a Friday today. It's 1 o'clock in the time zone I'm at, which is roughly US time zone, and there's still an afternoon session. Boy, oh boy, that one is certainly, let's be clear, in the bid stack of currency depth of bid and offers, there are very few in the 1.00001 and the 1.00003. You normally have voids just before key round numbers because people put orders at key round numbers, and vacuums just after them. So in terms of, if you're thinking of a volume by price, horizontal histograms running along the price values, what you'll typically have, we may as well draw this, do a little sketchy, what the hell, in terms of the volume histograms you might find, you may find reasonable ones after, and it'll get higher and higher at 99. But actually just under 1 and just before 1, you'll have very few. So you tend to get vacuums. We refer to it as vacuums and voids in our HVF theory, and that is because you accelerate through with momentum because there's very little bid. When people have to get out, there's not the same depth, and then you come out into the next level. Until such time as liquidity provider, central bank says, we do not like this, help, and they become eat all the euro puke pies until we puke, and that's what the Swiss bank will probably end up doing. And they have already been doing, have no illusion, although they don't want to talk about it, because if they talk about it and you realize they've been ineffective and they've been letting it slide in spite of holding it up, then you realize it's actually doubly weak. So when they're really running out of things to say, they'll say, we may consider, and then they'll buy it to try create this momentum and shake out stops. They hate people like me that get you on the right side of the market and cause a run where they lose money and you get to, as a retail dude, get to make profits. And in fact, it wouldn't shock, even one of the benefits of this being the euro is that it's unlikely that you won't be allowed to trade the euro. You saw on the ruble, those that didn't get their trades in on our HVF upside on the ruble weren't allowed to get them in. If you're too late, you can't put them on. It's going to be worth showing you that, as I say, and I'll pop into it and give you the trade that was in our community. A number of community members took that one successfully. I did not trade it. So look at that volume by price. That's showing you that there could be a Friday collapse. You can lose 33 pips more inside the day range, given what a big day it has been, and you could spill. That would likely see some form of reaction, or it could actually accelerate further a little bit through it before you get that reaction, and they'll try reclaim it. So you should have been short already up top there, here around about the 108s. And that was the risk reward that you might have returned. Let's just move that one out the way so you can see it. There you go, entry and then stop on the other side of that. That is optimized. And by the way, how many R's of that have you got? Well, we need to move it a little bit because it's slipped a little bit already. 22.6 if you were to close it now. You've bought the right to 22.6 new trades before you start to lose money if every single one of those 22.6 trades were wrong. If you close now, which you would not do overall, but just as a key element of understanding and how it approaches. Let's have a look at that ruble aspect and see how that's panned out. So here I've filtered on our ruble trades. We've had both a euro ruble and a dollar ruble. This was our pattern view trade submitted by a community member. Really great trade. Well done to him for doing the submission. We were updating on it before and after and around that, and a number of guys were in this one. And what ends up happening, guys, particularly when you're on the FX emergings, is that if you're not in them, they get set to no trade, only close after a certain period. If you were not in the ruble during this upside structure, you don't get to put it on later. Let's just have a look how that one turned out. There is the draw structure that was submitted, and this is how it's panned out. By the way, while I'm digging that out, we will be doing for the first time in a long time a physical event for those of you that would like to attend, and we will be covering our advanced materials in that physical event. That is regular scale. Let's just put it logarithmic so you can just see the extent. By the way, we trade what we call also overperformance trumpets. So you would have made up to 98 on a large portion, around 50 to 75% of your stake, and you would have overperformance on a residual amount as well. This is a great and exceptional trade that has occurred and is leading to amazing performance for those that are in it. That event is obviously exclusive to our Trading Metamorphosis clients, and you need to have seen our basic and our intermediate content, because we'll be delivering the advanced content in that particular meeting. You'll also have your meals taken care of for you during the 2-day event, and there'll be plenty of social opportunities just after that on the weekends, shooting and various other things. That is exclusive to our Sniper Circle community. If you are interested in becoming one and you are watching this and you are not, go over to themarketsniper.com, and you still have time to potentially attend. It is in Panama that we will be doing at Panama City Way. So that's your ruble. Wow. And many people are bears on the dollar versus other currencies. Remember, we are not bullish the dollar generally. We are not bullish fiat currencies as a whole. We are interested in modeling which currencies will remain strong during a period that other currencies are being forced into events like this, such as the Turkish lira, such as the ruble, and it will be FX emergings, my friend, that will fail, plus, as we've added, the big boy in the room that will be under great pressure, the euro. Not quite to the same extent of moves initially, but it will be painful and it will be easily available to all to trade. We have also given you prior the USD Korean won, which is doing just swell on a much bigger time frame. So at some point, other nations will come into focus in this. These have been given to you on the Great 6 trades. Go and watch those trades. So, an update on why the euro will fail, pointing out that this is Europe generally, so economically the entire Europe zone. So I want to highlight to you that the Polish zloty is not having a great time either. It's not just the euro currency. There is your zloty and how he's marching on in this environment, not doing great. We've also highlighted for those that want to do a slightly more exotic as well. And generally, I think the euro is the best for you to trade. But were you interested, you could have also have traded, for example, the Danish kroner, which is also around and about. And here he is. Again, it's against the dollar Danish kroner. Looks like that dollar index, doesn't it? It looks like that dollar index. It has upside targets. Could there be a down leg first? Potentially, yes. So this looks very much like the dollar index, which is the inversion of the euro USD. Have a look at them back to back together. Can you see the similarities? Can you see the similarities over the same time frame? I'll take those artwork off. This is not a good chart. However, it is not the time, as I've suggested, it's not the time for you all to charge in. So it's to make you aware that there is shoes dropping in the financial markets. People have been like, the crypto guys, oh, it's such a boring market, they don't trade. The big trades are the macro trades right now. It is about debt, yields going up. It is about potential debt failure. It's about the inflation narrative. The theme for this video is extreme inflation for the world, particularly extreme for Turkey, Russia, and Europe. That's right. Their gas, you guessed it, Ukraine, Russia saga, they're paying much higher than the official gas rate. They're paying it to Russia at the same time that America is buying Russian oil, now rushing off to buy Iranian oil, given that they are no longer independent at an energy state level. And what do you get is you're getting a very strong energies market at the moment, further inflationary, which is going to see the oil price continue to show immense strength. Where is oil today? Let's show you that one as well. We're in the currency still, I think it's above. Let's go. Here we go. Here is the Brent contract, very strong, 114. And there is the, let's take it off and put it on daily. We're still on the monthly time frame there. there's a blow-off move. Now, at some point, I would actually expect this to come off. People are getting already slightly accustomed to the fact that there's supposedly this war going on, no matter what you think of it. I'm not going to make political statements now. That is continuing. But you have run the 100. You've had a blow-off move. There is a bit of broadening structure in this mix in terms of the oil. At some point, I think actually it has to come down just because of affordability and the effect, and never mind the inflationary effect it's going to have on everybody who consumes it, and particularly Euroland. Heating, Britain is also affected by this. They haven't escaped the euro entirely. Their currency is not doing as badly as the euro to the dollar, but it's still not doing that great, and they are still having to get their gas supplies in, and you're paying a great amount. So energies is a big driver of the inflation. Inflation to get big, obviously in all the emerging currencies that have had currency failures. We've also mentioned the USD try, the poor Turks are having a tough time of it, now the Russians, but a much bigger and much more used to safe times, Europeans are going to have one of the hardest spells. You're going to find cost of affordability is really, really high. Let's just remind you again of the USD try and how that one came off. There's your blow-off event that occurred more recently. Let's take the eye off there. On the bigger time frame on the try, daily and weekly. Boy, oh boy, has this been a gift that kept on giving. Non-stop bull trend with upside setups along the way. We can write a book about the number of setups this one has given with a blow-off event into 19. When I first started watching this in 2013, it was at 1.3 to the dollar. You actually almost hit 19 there and are trading 14 since 2013. It feels like yesterday. It is actually quite a few years ago, in fairness, back. This is what you should expect for FX emergings generally. Whilst everyone is distracting you with wars and narratives and Black Lives Matter and transgender this and every other meme and COVID's 1984, what you should be very aware of is that there is a secular failure of most fiat currencies against the dollar taking place, plus an inherent failure, a slower motion version of the dollar against gold, silver, and physical things. In an inflationary sense, we're going to have a blow-off as people chase to dump worthless fiat into assets, physical assets. This is going to be long-term supportive for the macro gold bull that we've discussed really, really strongly. So huge inflation is the message coming. Those inflation numbers that you've seen so far do not include $100 oil, $110 oil, and $115 oil. They were baked in at the 80s and the low 90s as your oil prices were at that point in time. Think what that's going to do for the release of future statistics coming out in the not too distant future. So Euroland is next one in sight. At what point will the ECB make a statement and start talking more bullishly, start trying to jawbone the bit of strength back into this euro? At what point will the Swiss franc start making statements about their lack of comfort? This is an absolute spiller, guys. Look at this on a weekly chart. It is an awful skid. That open there is an absolute nightmare. This is a stretchy candle. This is a horrific week. A week that's, you closed at 104 and now you're virtually at parity. You are 40 pips away from parity. You closed at 104.33, 433 pips away, and now you are literally 41 pips away from parity. This is a huge move in this. This is pointing to real problems, European unrest, European inflation, global inflation generally, and I'm afraid to say this is a sign of the times. This is the beginning of your reset. If you want to be prepped for reset and you want to have the macro trades for reset, this is where we discuss them inside our Sniper community. Thank you for watching. Go to the link below. By the way, pure gold link below for those securing physical gold. physical silver and also platinum available. I've made all three of those purchases. You can too. Very reliable. Everything in the links below is something I actively use myself, otherwise it will not go in there. So you can utilize with confidence. Okay, thanks for watching. We look forward to updating you further on the progress of this trade. Don't forget, it is only at around 22 Rs on something that could in fact transpire to be 100 Rs and will lead to a major crisis spill event. You could be at the doorstep. You may not get that rally at the 100. It may just rush on. But be warned, if you chase in, your stop loss is far further away than those that got in when we gave. That little pink up top there is different to where you would have to place a stop if you took a chance. So I would suggest to you, do not a chaser. Watch and observe and make sure you don't miss the next one. Catch you next time. Thanks for watching.